Hello everyone. In the last video titled Mutual Fund Series number 1, we discussed about what is mutual fund, operations of mutual fund, risk, mutual fund industry and reason for investing in mutual funds. The link of the last video is given in the description box. Please see the disclaimer on the last video. Let's move on to our next topic. How to choose mutual fund schemes for investment. I would like to share how can we make use of information available on some financial portals to choose a mutual fund scheme. For example, moneycontrol.com, morningstar.in share some important information that could be used for choosing a scheme. Before that, there are two questions to be answered before choosing any mutual fund scheme. Number 1. What is going to be your investment period? Number 2. What is your risk appetite? Let's go. What is going to be your investment period? Number 1. Debt fund. Number 2. Hybrid mutual fund. The last one, equity mutual fund. For example, if you are saving for some important function which is going to happen in 1 to 3 years, it could be for a marriage, college admission, then investment in equity share is not a right choice. It's better to invest in debt mutual fund. Let's see, what is a debt fund? A debt fund is a type of mutual fund schemes that invest in fixed income securities such as bonds. The bond pay interest periodically, monthly, quarterly and repay principal at maturity to investors. Now, we may think, why should we invest in debt instead of bank deposit? The answer is the interest rate on bonds are normally higher than bank deposits. But please note that the risk of bond is more than bank deposit. Understood? You can see here itself in the screen. Understood? Next, if your investment period is between 3 to 5 years, then you can consider hybrid mutual funds which invest both in equity and bonds. Let's look. HDFC Balanced Advantage Fund Growth Schemes under hybrid schemes only. It's nearly 56% of the fund is invested in equity shares, 28% in bond, and the remaining is kept in cash. Next, let's move on. If your investment period is more than 7 years, then you can go for equity mutual fund with a mix of large cap, mid cap and small cap, etc. Now let's see what is large cap, mid cap and small cap. Before going to invest, please note these points. This is very important. We have Bombay Stock Exchange has over 5,000 publicly listed stocks. These 5,000 shares are divided into small cap, mid cap or large cap based on market capitalization of companies. Now, how to calculate market capitalization? The market capitalization means the total value of companies' outstanding shares in the stock market. Understood? For example, if the company has around 1 lakh shares and currently trading at rupees 200 each in the stock market, the market capitalization of that company would be rupees 2 crores. For example, 1 lakh shares multiplied by 200. Now, according to SEBI rule all companies that are listed on the stock exchange market. Number 1. Large cap. The top 100 companies are categorized as large cap companies. Their market cap generally tend to be more than rupees 20,000 crores. Next, mid cap. The companies from ranking 101 to 250 in terms of market capitalization are known as mid cap companies. Their market cap generally tends to range from rupees 5,000 to rupees 20,000 crores. The last one, small cap. The companies that are ranked from the 251 position onwards in terms of market cap are automatically categorized as small cap company. Small cap companies generally don't have a long track record. This is the large cap, mid cap and small cap. If your investment period is more than 7 years. Next, what is your risk appetite? Risk means the possibility of something bad happening to your investment. For example, your investment value might rise or fall because of market capitalization. Normally, the risk will be more in the case of small cap than mid cap and large cap. If your risk appetite is less, then you should invest more in debt fund such as bonds. So, please choose and invest according to your risk appetite. Once you decide what to invest, we can use research information available on some financial website to choose mutual fund schemes. As I told earlier, we can check in moneycontrol.com or morningstar.in. Now, let's go to the web page link of moneycontrol.com. Moneycontrol.com is one of the well-known financial websites. It provides CRISIL rating for most of funds. Let's go to the website and see. When you open Money Control website, now you find mutual fund on the navigation page. You click that. You get a drop down in which you see a separate heading, Top Ranked Fund. Please click Top Ranked Fund and it will list all top ranked mutual fund schemes as per CRISIL rating. CRISIL rating is one of the respected rating companies in India. It gives rating from 1 star to 5 star according to their performance. 5 star being the highest performance and 1 star being the lowest performance. You can see rating for all type of mutual funds. A hybrid, equity and debt. You may choose mutual fund schemes which are given 5 star or 4 stars. Let's check. A fund under 5 star rating, we can see SBI Long Term Equity Fund. Then click that, it open a new page. You can see snapshot, returns, analysis, risk, etc. This information would enable you to choose a mutual fund schemes. You may also check with some other financial websites which rates mutual fund schemes. Let's look at morningstar.in, which also rates mutual fund schemes. Once you open the website, you find mutual funds on the navigation bar. Please click mutual fund. You can see screen funds. Please click the screen funds. It will take you to a new page where the rating can be seen. It provides two types of rating. Number 1, Morningstar rating. Number 2, Morningstar Medalist rating. Morningstar rating rates funds based on its past performance. Funds are rated from 1 to 5 stars, which the best performers receiving 5 stars and the worst performers receiving as single stars. Morningstar Medalist rating rates mutual fund schemes based on forward-looking analysis of investment strategies. Forward-looking analysis means analyze about future profitability based on various factor. The Morningstar medalist rating for funds is expressed on a 5-tier scale running from gold to negative. The top 3 rating of gold, silver and bronze all indicate that analysts expect the rated mutual fund schemes to produce better returns. If you want to invest in mutual fund schemes, then you may take the help of information available on moneycontrol.com or morningstar.in and choose a scheme. For example, in moneycontrol.com, we found SBI long-term equity fund under 5-star rating. Let's click 5-star here and then choose SBI fund management under fund company. Let's go down and see. SBI long-term equity fund is also rated as 5-star. This gives some kind of comfort to us. This way, you can select a mutual fund schemes using moneycontrol.com and then recheck with morningstar.in.